Hi there. Today we are going to explain to you how HMRC checks business mileage and flags false claims through AI surveillance in 2026. Watch it there.
Hello there. Now, before we jump in, you should know that everything we're about to cover has been put together by the expert tax advisors at My Tax Accountant, one of the UK's most trusted accounting firms. Okay, let's start with a number. £4.6 billion. That's how much extra tax revenue HMRC pulled in during a single year. And they didn't do it by hiring thousands of new inspectors, they did it with artificial intelligence. And if you're self-employed or run a small business here in the UK, that very same AI is about to start looking at your business mileage claims like never before.
Okay, let's really let that number sink in. This isn't some future prediction. This has already happened. £4.6 billion is a truly staggering amount of money, and it was found by connecting digital dots that honestly used to be completely invisible. This marks a massive shift in how tax compliance works in the UK. You know, the days of getting the benefit of the doubt, they're pretty much over. Now it is all about the data.
So the big question is, how on earth did they do it? Well, the answer lies in a really powerful surveillance system that's been quietly growing in the background for over a decade. And starting in 2026, its power to check your business expenses, especially your mileage, becomes almost absolute. Understanding how this thing works is no longer just a good idea. It's absolutely essential for your business.
Now, as I mentioned, all the insights we're about to go through come straight from the expert tax advisors at My Tax Accountant. These are the people on the front lines day in and day out guiding UK businesses through this new digital world. So rest assured you're getting the most current and practical advice out there.
So here's what we're going to cover. First up, we'll look at why the game has completely changed. Then we'll get into the new digital rulebook you absolutely have to play by. After that, I'll introduce you to Connect, HMRC's AI detective. Then we get to the really juicy part, what actually triggers an audit. And most importantly, we'll finish with how you can build an audit-proof mileage system to keep your business safe come 2026.
All right, let's start with the big picture. Why is 2026 such a critical year? Well, to put it simply, it's the perfect storm of new laws meeting incredibly powerful technology. It means the old ways of logging your business miles, you know, a quick guess in a diary or maybe a spreadsheet you fill out at the end of the year, those aren't just bad habits anymore. They're a direct line to getting an investigation from HMRC.
And the foundation for this new world is something called Making Tax Digital for Income Tax Self-Assessment, or MTD for ITSA for short. Now, this isn't just some minor tweak to the system. It's the single biggest shakeup of the UK tax system in a generation, and it has a direct impact on how you record and report every single one of your business expenses.
So who does this affect, and more importantly, when? As you can see, it's being rolled out in phases. From April 6th, 2026, if you're a sole trader or a landlord and your income is over £50,000, you're in. You have to comply. A year after that, the threshold drops to £30,000. And then it's expected to drop again to $20,000 in 2028. For a lot of tradespeople, consultants, and professional drivers, that April 2026 deadline is right around the corner.
This really spells out the difference, doesn't it? The old shoebox method, keeping a box of paper receipts to sort out in a panic in January, is now totally non-compliant. The new way demands a continuous digital record. You'll have to send quarterly updates of your income and expenses straight to HMRC using special software. This creates a live, real-time digital trail of your entire business's finances. So you're sending all this digital data to HMRC every quarter. But what are they actually doing with it? Well, this is where we meet Connect. Think of it as the enforcement engine, an AI-powered digital detective that's constantly sifting through your data, hunting for mistakes, anomalies, and any inconsistencies it can find. So what exactly is Connect? Well, it's a colossal data analytics platform. It cross-references more than 22 billion data points to build an incredibly detailed financial picture of you. Its whole purpose in life is to join the dots between pieces of information that used to be completely separate, just to see if the story you're telling on your tax return lines up with the story your data is telling everywhere else. And where does it get all this data? This is the bit that catches so many people out. Of course, it looks at your bank and credit card statements, and yeah, it pulls data from other government departments like the DVLA to see what car you drive. But the crucial part is that it also scrapes public data from your digital life, your posts on social media, what you sell on eBay or Vinted, even your property listings on Airbnb. It even uses geospatial data from traffic cameras. Nothing is off limits.
Let's make this really simple. Picture this. You're a freelance consultant based in London. You submit a mileage claim for a full week of business travel, visiting clients up and down the country. But during that exact same week, you posted holiday pictures on Instagram from a beach in Spain. Connect sees both of those things. It flags the contradiction instantly. And just like that, your tax return is pushed to the top of the pile for a real person to investigate.
Here's another example. Those ANPR, automatic number plate recognition cameras, they're everywhere. And guess what? HMRC has access to that data. They use it to check your travel patterns. See, you can claim mileage for travel to a temporary workplace, but you can't claim for your normal commute. If those ANPR cameras see your car making the same trip to the same office building every single day, Connect's algorithm flags it, thinking, that looks a lot more like a commute than a special business trip.
Okay, so we've established the system is incredibly powerful. And what this means is that in 2026, an HMRC audit is rarely just a random spot check. No, it's a targeted strike, triggered by very specific digital red flags that Connect has spotted in the data. You'll definitely want to hear this part.
So what are these red flags? What actually makes the AI single out your tax return from the millions of others and say, hang on a minute, let's have a closer look at this one? Knowing what they are is the absolute key to avoiding them.
Right, let's break these down. First up, a lifestyle mismatch. Connect sees from DVLA data that you own a fancy car, but your declared income just doesn't seem to add up. That's a flag. Another one is a high expense ratio. So if you're, say, a graphic designer and your mileage claims make up 30% of your total turnover, the AI flags that as really unusual compared to others in your industry. Round number entries are a classic giveaway. Claiming 200 miles for a trip just screams I'm guessing, whereas 203.4 miles looks like you've actually recorded it properly. And it checks your bank records too. If you've claimed 20,000 miles but you've only spent a few £100 on fuel all year, well, it knows something's not right.
Okay, I know that all sounds a bit scary, but here's the good news. Building a rock-solid defense is actually pretty straightforward. This is all about feeling empowered, not fearful. By putting a simple, robust system in place right now, you can make your mileage claims practically bulletproof. Stay with me here. This next point is crucial for pretty much every small business out there.
So what does a perfect 2026-ready mileage log actually look like? Well, it needs these 5 key things. It's got to be date and time stamped. It needs the precise start and end postcodes so the route can be checked on a map. The business purpose has to be specific, not just meeting, but client meeting with ABC Corp about Project X. You have to record which vehicle you used, the registration number, and this is the big one. You have to classify the journey as either business or private at the time it happens. HMRC calls this a contemporaneous record, which just means it was made at the time of the event, and believe me, it carries so much more legal weight than a log you cobbled together from memory months later.
And the best news of all is that modern technology makes this incredibly easy. There are GPS-enabled mileage tracking apps that run on your phone and can do almost all of this for you automatically. Using a dedicated business fuel card creates a perfect digital paper trail of your fuel costs, which lines up beautifully with your mileage log. And if you use cloud storage for any other digital receipts, you've got a complete, defensible audit trail just sitting there, ready to go. And here it is, the single most important tip from the experts at My Tax Accountant. If you take away just one thing today, make it this: record and classify your journeys as they happen. Use an app. Don't put it off. A real-time, digitally captured record is your #1 absolute best defense against an AI-driven audit. It turns your claim from an estimate into a verifiable fact. So, we have covered a lot of ground. We've seen how the rulebook has been torn up, how HMRC's AI detective works, and exactly what you need to do to stay on the right side of the line. So let's just pull all of that together now into the key takeaways and the practical next steps you should be thinking about. If you only remember 3 things from our chat today, please make it these. First, doing things the old way is finished. Digital quarterly reporting is the new mandatory standard. Second, HMRC's Connect AI is always watching. It links your tax return to your bank data, your car, and even your public social life to spot anything that doesn't add up. And third, your best and only real defense is a good offense, creating a detailed digital mileage log in real time. Now, it's really important for me to say that this information is for general guidance only. Every business is unique, and tax rules can be incredibly complex. So please don't use this as a substitute for professional advice. You should always consult with a qualified advisor before you make any big financial decisions.
And speaking of which, if you want to make absolutely sure that your business is ready for 2026, the best thing you can do is get some expert guidance. The team at My Tax Accountant are ready and waiting to help you navigate all these changes. You can give them a call on 0208 570 8531 or drop them an email at info@mytaxaccountant.co.uk. And for more incredibly useful insights just like this, make sure you subscribe to the My Tax Accountant YouTube channel. Thanks for your time.